reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng trading with cuts of almost 1.7% as well.
Don't sell just because there's a bubble.
There are two things in favor of India as we start trade. This gush of liquidity which is coming into mutual funds, and mutual funds can't sit on cash, they've got to deploy. Second, of course, is this anti-AI bit. A third lower, 26,120 is where we're at.
The global macro environment is somewhat different than what India is witnessing at this point of time.
The resale market, which I've always maintained is a very secular indicator of how the market is going on, continues to be very bullish and very strong, at least in our micro markets.
Businesses are going to grow multiple times in this decade, and we are very, very positive and optimistic on every business that we are in.
This is the third fire in a matter of around 2 months. Year-on-year basis, revenue is down by almost 9.5%.
It's a 100-point downtick on the Nifty as we speak after touching that 52-week high level yesterday.
Going forward, over FY26 to 30, that outlook is in the range of 15 to 40%.
Bank Nifty, that also saw some recovery, but that got sold into yet again. So it's a 0.6% cut on the Bank Nifty.
Okay, it's somewhat similar to where we were when we started in the morning. 40 points lower, off the low point of the day. But, I mean, as you saw the clips describing the trading action through the day, and I think that as the intraday shows you as well, there's been ups and downs, and basically the market not really going anywhere. Market breadth is definitely negative. 850 stocks are higher, and about 2,150 stocks are lower at this point in time. So that's the overall picture as far as the Nifty NSE advanced decline is concerned. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel. Nigel, hi.
Well, hi, Prashant. Not too bad looking screen, actually. Someone had told you in the morning, look at the Asian markets and looking at other, the way US markets ended as well, and we'll be down 0.1%. I'll tell you what, the bulls would have grabbed it, and also if yes, the breadth of the market isn't great, but it's still pretty okay. And it hasn't worsened, actually. You're still in that, 1:2, 1:2.5 or thereabouts. So that, the ratio has remained constant pretty much. So not such a bad trading session. You'll want the broader markets to participate. But first, the global markets need to stabilize a little bit. Then we can go to the fresh all-time highs and then hope that, a larger number of stocks do participate. Absolutely.
It's a quieter kind of session today. I'm just looking at the biggest volume-led gainers. I can maybe count 10, 12 names. That's it. With large volumes and large price action. So it's otherwise, I mean, it's a very, very vibrant screen out there. Not so much today. So maybe just a few names, right? Maybe and we don't talk about this one at all. Aztec is up 10%. It's the number one volume-led gainer on the NSE right now. McLeod Russell, 13% gain. Second largest volume-led gainer. Karnataka Bank is coming up with a 9% gain. Apex Frozen Foods is up 18%. Just a bunch of these names. Sorry, that is McLeod, not McLeod. I'm sorry, beg your pardon. Which I was referring to. DCM Shriram is up 8%. Sharda Crop is up 5%. Anupam Rasayan has been strong from the word go. There is Aether, which is up 3.5%. Hindware is up 5%. And that's it. I mean, that's basically the 6 or 7 names which I mentioned, which have got large volumes in it. Otherwise, I mean, it's kind of a quieter day, so to speak. Just quickly running you through what's on the the next hour and what you will see. So stocks, of course, recovering from the day's low, market rebounding. But, of course, as we've been saying, still trading with slight amount of losses. Market breadth is negative. We'll talk about Groww, right? Reported numbers, first earnings after the listing. Stock was up about 5-6%, is sold off about 1% higher, but something which we will talk about in some detail. Hindalco is one of the top Nifty losers. Nigel has been telling us about that, so we'll get a view on that as well as we go along. And, brokerages on Mahindra and Mahindra, that's been the top story, and you heard a whole host of top leaders from the Mahindra Group talk to us earlier. So we'll play out those sound bites and, of course, get you that perspective as well. The other story which we will tackle and get your views on, of course, it's a Friday, right? I mean, 2 days now, the US market is kind of sold off. Actually, only yesterday's sell-off, I think, is more, in that sense, important because people were looking for the NVIDIA results to basically answer the question if the coast is clear. But obviously, the coast is not clear. So what will US session later tonight hold? And I think that's like a unknown out there going into this weekend. How should you position yourself in this last hour of trade? Nagaraj Sethi is with us of HDFC Securities. Nagaraj, good to have you with us here. Thanks very much. What would you do?
Hi, good afternoon, Prashant. Rightly said, Nifty has been in a strong uptrend, no doubt about that. Higher tops and bottoms on the daily chart is indicating market is at a strong uptrend. So, though it is showing some consolidation at the higher levels, there is a resistance around 26, 150, 200 levels. I'm not expecting any bigger decline from here onwards. The consolidation momentum by today or at least by next session, Monday, we could see eventually Nifty bouncing back from the lower levels and could breach above the recent high of all-time high of around 26,277 and higher. I'm expecting Nifty to move towards the 26,500 levels in the next few weeks.
Okay, sounding bullish then, Nagaraj. What about individual stocks?
Yeah, I have two stocks from a banking side, particularly Bank Nifty and mid-cap banking side. I'm bullish though. My Bank Nifty is showing cut-off around 0.5%. I'm expecting outperform in the near term. So first one is the Ujjivan Small Finance Bank. Chartically has been in outperformance over the last few months. Largely higher tops and bottoms indicates the overall strength of that particular stock. Currently trading around 54.25 levels. It has broken above the consolidation phase, and I'm expecting this to move up towards the 57.50 is going to be the next target. One can look to buy at this point of time around 54.25, 57.50 is going to be the target, and one can place a stop loss at 52.50. Second one is from Mahindra and Mahindra Auto Space. M&M has been a constant uprun over the last many months. Higher highs, higher lows indicates that the stock is in a near-term uptrend for the long term. So currently it plays around 3755 levels. The overall chart pattern, including volume breakout during upside breakout as well as RSI, is indicating more positive bias. One can look to buy at this point of time, currently around 3755 levels. Upside target would be around 3950. One can place a stop loss at 3625 levels.
Okay, all right, Nagaraj, thank you very much for that. We'll come back to you in a bit and get some more trading ideas. For the time being, let's focus on the newsmakers of the day, and Groww is definitely in focus today, not because of the stock price. You don't have a sharp up or down reaction on Groww today. It's actually a fairly calm session, at least for now, 1% up. The numbers for the second quarter are out. How do they look? Let's ask Vivek. Vivek, over to you.
Well, that's right. So 60% higher since listing, and all eyes on India's largest discount broker as to how exactly quarterly numbers would pan out and whether they could live up to the kind of stock performance that's actually come about. Now, immediately post the results, the stock actually popped up 5%, but it has cooled off since then, and let's understand why. First up, number one, when you're looking at the results on a year-on-year basis, the revenues have actually gone down almost 9% on a year-on-year basis, and this is a bit of a concern. However, aided by lower operating expenses, aided by lower costs, actually you're seeing the operating profit. Now, operating profit here is measured without the interest cost. That has actually improved both on a year-on-year basis as well as on a sequential basis. In fact, both year-on-year as well as on a sequential basis, the operating margins have actually jumped up higher. And profitability on the back of that, both year-on-year as well as sequentially, has gone higher. But the key thing to watch out for is the fact that during the time of listing, the management told us that FY26 is going to be a year of growth, and they're expecting to see a top-line growth in the range of 25 to 30%. But at the end of H1, it's actually been a bit of a degrowth as far as Groww is concerned. So there's a lot of heavy lifting to be done as far as H2 is concerned in order to go ahead and meet the management guidance. Also, when you're talking about cost, the management had said in tandem with the growth that they're expecting to see on the top line, they're expecting operating costs also to go higher. So it'll be interesting to see how exactly H2 pans out, and also what the management guides for, especially as far as the investor call is concerned.
Okay, all right. Thank you for that, Vivek. Let's take this forward. We have Deepan Mehta joining us as always. Deepan, great to have you in. Now, we've discussed this dynamic move that the stock has shown since listing quite often. But right now, the question is really on growth. Whether the numbers, at least on a fundamental level, justify a buy, and then at what price to buy is the second part of the question.
Yeah, Sabhi, good afternoon, and thank you for having me on the show. I think that Right now, in my opinion, the stock is fairly valued. And I was very positive on the IPO and I thought it would list very well, which it has. But right now, I think seems to be fairly valued. There are some headwinds, and already that risk factor is there about any SEBI regulation which will curb FNO trading. But Groww is gradually going to grow into other asset classes, into other financial products. And the real strength and the asset of the company is the number of users which are already registered with them. They have done the KYC, they've got the demat accounts, and still they are growing their market share as well. And that's a really valuable proposition. And I would rate that as one of the key factors to keep the stock in mind, and maybe at corrections at reasonable valuations, one could look at it. Over the next 3 to 5 years, it will definitely transform itself away as much as possible from FNO trading to more broad-based annuity type of businesses. We have seen that happen in Angel One. We have seen it happen in Motilal Oswal as well. I think Groww will follow the same story, but at a much larger scale.
Dipan, good afternoon. I think you had mentioned right about Nvidia's the way it's trading at around 40 times and 2.5 times. Last evening I hear from source-based information that Mr. Jensen was trying to get in touch with Dipan Mehta and thank him for the idea. A probable listing in India. Take some more money off the table. Kidding on that front, Dipan. Let's talk about not Nvidia, but Novelis. Because last night there was another fire that was reported at their Oswego unit, which is in New York. They reported, remember, a massive fire in September, a smaller one in October. So this is the third straight fire that we've seen in a matter of 2 months at Novelis's Oswego unit. Now, the management commentary in October was that they plan to start operations in this affected part of the plant in December itself. They also mentioned that there will be a cash flow impact of around $550 million and the EBITDA loss could be $150 million or in the second half of the year. They said there'll be pain in the second half of this fiscal, but in FY27, they'll recover most of it because most of it is insured, so 70 to 80% recovery is what they guided for. Hindalco put out a clarification a couple of hours ago. They are saying that everyone working at the plant was safe, evacuated, there were no injuries. That's the best piece of news actually to hear, that no casualties, no injuries. That's good news. And multiple local fire departments out there have responded. Crews remain on site to monitor the situation. So for the time being, there's a pullback in the stock because the street is wondering whether or not the December deadline will be met. And why exactly are we seeing so many fires at this particular unit? Ford, for one, will be impacted. But from an India shareholders perspective, they know the second half of the year is going to be a washout, but resumption of operations is going to be crucial for the way forward. Dipan, what's your view? Aluminium is doing so well. It's been quite strong. The dollar has strengthened a little bit, which could cap the pricing on base metal prices. But what's your view? Hindalco has been a decent performer. If you want to play aluminium, would you now rather look at Vedanta? Would you rather look at Nalco?
I think that broadly we are seeing metals doing very well. And Hindalco, eventually, I think Novelis is a very key asset because with higher tariffs in US, certainly they would have a competitive advantage as compared to imports. And the local business or the domestic business also doing very well because of higher realizations. And valuations are reasonable, I would say attractive at sub 10 times or so. And expansion plans also going on stream in India as well as Novelis in US as well. So broadly, I think that it's a stock one to remain invested in. And if you get the cycle right, then maybe you could invest at the bottom whenever that is. But on the whole, I would remain invested and generally have a more positive view on metals per se because of valuation and because of the way I think the entire system is playing out, where hard assets are giving preference over some of the financial assets, and that process may continue.
Dipan, the Mahindra investor meet, of course, has been something we've been tracking closely. I just want to play out sound bites of the interaction that Shireen had with the top leaders at Mahindra and Mahindra. These are, of course, targets which Mahindra Group Chief Anish Shah laid out in that interaction. Listen in.
Auto continues to be a mainstay for us and our most exciting business, as we always see in all our forums. But other businesses have grown rapidly, and farm continues to be a huge deliverer of both profit as well as cash. I will highlight our growth gems. We've been talking about that for some time. When we started the journey on growth gems, collectively they were worth 8,000 crores. in March 2020. Today, they're worth 56,000 crores, which is a 7x growth in a little more than 5 years. Mahindra's share in them, because some of them are listed, is 48,000 crores. And the value of our growth gems to Mahindra today is higher than the value of Tech Mahindra or Mahindra Finance to Growth Gem. We are building on a very strong foundation, and we've done well over the last 5 years. As we look ahead, to summarize what some of the leaders have said, we presented to our investors our growth over this decade, from 2020 to 2030. We are halfway through that. For this decade, SUVs 8x in revenue, LCVs 8x in revenue, ILCVs 6x in revenue, electric three-wheelers 6x in revenue, Mahindra Finance 5x in assets under management, Susten 5x in installed capacity, Aerostructures 12x in revenue, Lifespaces 14x in pre-sales. We're thinking of growth in multiples, not in percentages. And profit growth will be higher than revenue growth, and market cap hopefully will be higher than that.
I mean, those are big numbers, right? I mean, we're not talking about percentages, but number of times growth. Well, we can catch the entire conversation at 5:30 p.m. tonight, today evening, and 9:30 p.m. tonight. So that's an exclusive, and it's a big one. Deepan, my question is not so much about Mahindra and Mahindra, but I mean, you know, sometimes I remember we had this conversation with Sanjeev Goenka, and he kind of, this is not the last one, but the one before, I think about a year and a half, 2 years ago. A similar big picture kind of conversation, and Mr. Goenka, I remember, laid out targets for individual businesses. And stocks actually responded in a big way. From that point, actually, Deepan, leave Mahindra and Mahindra, the auto business aside, anything else you'd look at it? You know, there is life, there is holidays, M&M Finance, of course, is there as well.
Yeah, Prashant, of course, I think very positive interview and very positive statements coming from Mr. Anisha, who's been extremely positive for minority shareholders. I was just checking since April 21, or rather last 3 years or so, the stock has given a compound return of about 44% or so. So great value creation in the last 3 years at M&M. But apart from the automotive company, there are two other companies which show a lot of promise. One, with usual disclosure, we are invested in them. One is Mahindra Holiday, and they have announced 1,000 crore entry into leisure hospitality. So there also we are seeing a change in the business model. I thought the company was always playing well below its potential, but now maybe things may change over there and they get more aggressive. And I think it's reasonably valued also given the M&M brand and their corporate governance standards and other aspects. And M&M Finance, I think after many, many quarters, I think September quarter was a bit of a relief, where they actually showed very decent performance, and some of the issues related to NPAs, those seem to have been resolved. Of course, the industry has done very well, and the real problem starts or challenges start when the industry starts to go down, which we have seen M&M Finance not able to manage well. But amongst all the other companies, of course, M&M remains the prime mover. Amongst the other M&M group companies, most positive on Mahindra Holiday and M&M Finance. Again, a disclosure, we have investments in all these three companies, so our views could be biased.
Okay, all right. You know, and in fact, Mahindra Holidays, I think from the peak that we saw in 2024, it's come down considerably. But that's what Deepan is positive on. And just going by the kind of demand for the end of year as well, most resorts are almost booked out there. So could be a stock to track as well. By the way, just the big story is not this market, but it's the rupee.
Yeah.
I think that should come up for you on the screen. There's been a sharp, sharp drop in the rupee. There's weakness being seen on the rupee. It's moved to around 89.3.
Whoa.
Big move is what we're seeing out there. I think we'll get Lata in just a bit to tell us what is she picking up. But there's a massive surge. Just take a look at the way the rupee has moved actually. 88.6 to around 89.35 or thereabouts. I'm not sure whether or not there is, you know, any kind of fat finger or something that's involved in this. But there's a very, very sharp depreciation. So it's at a record low, and you know it's suddenly moved. And in fact, it's continued. The last tick actually is 89.45. So there is some weakness that we're seeing in the rupee.
I mean, you know, it's moving like a small cap,
yeah.
Right? I mean, you don't see even stocks moving like this. Just look at that. I don't remember seeing a move on the rupee like this. I'm not sure if there's anything which has happened. You know, what could happen, right? I mean, there's no, and we'll of course scan the wires, etc., to see if there is any news flow per se. And of course, we would have put it out so far, but it's a pretty unprecedented move that we have, and we'll try and get some perspective in terms of what has happened. Has the market got some sense of what? I mean, the US-India, the deal. I mean, but it'll show up in equities as well. But this is a 70 paisa move on the, against the rupee, which has come through. So
there's
at a
also
record low.
some move on the dollar. Maybe we can pull up the DXY. It's volatile, but in a percentage sense, I mean, nothing compares to what's happening specifically on the dollar rupee. The dollar continues to hover around the 100 handle.
But the dollar actually is weakened a little bit, because it went to 100.5 in the last few sessions, and now, in fact, it's come down to around 100. And the rupee actually was more or less steady when the dollar was showing some strength. And suddenly that's given away.
So that's what there doesn't seem to be a massive dollar surge in the last 1 hour. That's exactly what I'm saying. It's been more or less range bound around this 100 handle, for the better part of the day. So this seems to be a rupee specific move. And we're going to be getting you more on this as we go along. As far as the equity screen goes, I mean, that's where the picture is more or less, similar to what we've been tracking. Still about 70 points lower on the Nifty. So not too much changing there. But volatile for the better part of the day today. Let's do one thing. We'll take a break, come back on the other side, and we'll have with us Venkatesh Balasubramaniam from JM Financial Institutional Securities. We'll get a perspective on the market. Welcome back. The equity screen is still wobbly, still about 100 points lower on the Nifty. Let's bring in Hormuz. And actually, there's a decline on the equity front also. That's quite evident for the time being. Need to see if the day's low holds or not. So as we're looking at the screen, that's the Rupee. At least the slide seems to have stemmed. But we still need to figure out what exactly transpired over there. More on the Rupee in just a second. In the meantime, let's go across to Hormuz and talk about the day's big movers and shakers. Over to you, Hormuz.
Final few minutes of this week in the trade, and there are, of course, enough and more names that are buzzing in today's trading session. And start off with this name called Dharmaj Crop Guard as a recent listing. It's the third straight day of gains. And because of this move, the stock is set to snap a 6-week losing streak today. The stock is trading at the highest weekly volumes in 5 months in this week so far. And in today's session, we have had over 2 lakh shares that have been traded. The 20-day average comes up to around 60,000 shares. And as a result of this 3-day up move, the stock has gone back above its IPO price of 237. Now, the smaller private banks doing well, joining the list today is Karnataka Bank. And the biggest single-day gain since June of 2023. The volumes are the highest since November of 2022 in today's session. More than 3 crore shares of Karnataka Bank have been traded today. The 20-day average is just around 25 lakh shares, and the stock has moved above all of its key moving averages, but has been a bit of a slow grind lower for Karnataka Bank, down 11% this year, was down 9% last year as well. Now, Aztec Life Sciences, we spoke about the stock in yesterday's session. We are talking about it in today's session as well because it is building on to yesterday's gains. Now, 6 out of the last 7 trading sessions where the stock has gained almost 30% now in the last 2 sessions is Aztec, and today's volumes have comfortably crossed yesterday's volumes. And to speak of yesterday's volumes, they were the highest since February of 2010, and it has gained more shares traded in since that as well. Now, more than 1.5 crore shares have been traded today. The 20-day average here is only 3 lakh shares, but the stock has been a bit of an underperformer. It has had 3 consecutive years of negative annual returns, including this one. And shrimp stocks are taking turns to move. Avanti Feeds moved higher earlier this week, and today is the turn of Apex Frozen Foods. A 20% up move in today's session, snapped a 2-day losing streak. Today's volumes are the highest on record for the stock, with more than 1.5 crore shares traded here as well. The 20-day average is around 4 lakh shares, and the third straight month of gains for the stock, which has ensured that the stock has reversed all the losses of 2025, has turned positive on a year-to-date basis.
Okay, all right. Thanks very much for that, Hormuz. You know, what we'll do is Venkatesh Balasubramaniam, MD and co-head research at JM Financial Institutional Securities, is with us from the sidelines of the JM conference. Venki, good to have you with us here. Good afternoon. You know, okay, I think we lost the line, but in any case, what we're going to do is talk about the Rupee, and that's the top story. So let's just have the intraday up, please. 89.45, and that's a massive move which has happened, all in the last 15-20 minutes of trade, and I can tell you that you know, pretty much everyone seems to be scratching their heads. Some feedback that RBI did not intervene. The whole street is short, hoping for a trade deal. But this is, of course, conjecture, and we don't exactly know what has happened. Lata is here, who's also been making phone calls. And Lata, anything you're picking up?
Well, the only reason why everyone is pointing to the fall in the of the rupee is that the RBI was not there at 88.70 to 88.80. Until now, every time the dollar became that expensive, the Reserve Bank has come in and supplied dollars. The fear was that if it crosses 89, it goes to 90 very quickly. But Reserve Bank is there at that point, and probably everyone knows there is a trade deal round the corner. The market was not attempting to break that barrier, also because a lot of people have sold dollars against the rupee, sold the dollar rupee, as it were, expecting that the rupee has already, discounted all the bad news. But there are people who are sitting with open positions outside above 89. Importers don't have enough dollars. And the fact that Reserve Bank allowed that Lakshman Rekha to be crossed has led to quickly importers coming in and buying because they're completely uncovered above the 89 mark. This is dealers just screaming at us, saying bad policy on the part of Reserve Bank. They could have allowed a graduated fall. They would say that because their books are bleeding. But there's only one answer to this issue. Until now, at 88.70, 88.80, the Reserve Bank was supplying dollars. Today, in the last 10 minutes, it has not supplied the dollars, and therefore the currency is now trying to seek its own level. It's very difficult for the market to come and take the other position when they have just started bleeding from the 88.80 mark. The support will have to come from an external force, which is the Reserve Bank. People were expecting at 89.35, 89.40. They keep telling me every second that maybe it's 40, maybe it's 45. Now, of course, everyone says maybe it's 89.50. But only an external force can stop this because the market is extremely uncovered, unhedged above the 89 position.
Yeah, basically, people were short the dollar, expecting a trade deal. And,
And the stop loss got triggered at 88.80.
As you said, there is a lot of positions. So that covering essentially going into the weekend once stops, etc. to card. Let's get Jamal McCline, Managing Director at McCline Financial Services. Jamal, good to have you with us here. Thanks very much. I mean, if you're watching the screens, if you heard Lata and the discussion here, your thoughts, what's happened? Jamal, are you there? Jamal, are you there? Okay, I think we lost the line. So we will try and have him back. But let's get in. Do we have Venkatesh? Do we have? Okay, I don't think we have Venkatesh either.
But very, very surprising fall, right, Lata? And I think some optimism that we're going to hear about that trade deal, which hasn't happened. You told us earlier this week the trade deficit was rather weak. Now you don't have RBI that's present at around that 89-odd mark.
Fundamentally, there are many reasons why the rupee should weaken and dollar should become expensive.
But the trade numbers came a couple of days back. I mean, this cannot be a slow reaction to the trade numbers, right?
Well, you keep worrying that foreigners have not entered.
Yeah.
We saw 2 days of net foreign inflows, but it looks like today it will be an outflow because there is a general equity market.
We have Mitul Kotesha joining us, Head of Forex and EM Macro Strategy, Asia at Barclays. Mitul, good to have you with us here. If you can comment on the move that we are seeing in the rupee now and what's causing it.
Yeah, look, I think as has been highlighted, it does look like this pent-up demand for dollars has finally come through. We have seen the RBI, at least up until now, holding a line in the sand just below, obviously, the 89 level, and clearly that's broken today. Obviously, there's speculation on what's driving this and whether this is importer demand picking up and driving this move through there. I think probably a surprise for a lot of people is where the RBI is at this point in time and whether they will come in now and reverse this move or dampen this move. Generally, we are seeing illiquidity in markets at the moment. We've obviously had a pretty tough risk-off session in U.S. markets overnight yesterday, and we're seeing general broad dollar demand coming through across the board. So this is partly reflecting that as well. But clearly, I think this move has taken many by surprise here. And as I mentioned, generally the fact that we've not seen that cap hold that we've seen in recent weeks has also perhaps been something that has caught investors out.
Hi Mitul, thanks for taking our call. If the Reserve Bank doesn't step in, you think that the rupee fall can be severe, much more than what we are seeing now?
Well, look, I think it's already spiked quite sharply. I would be very surprised to see this RBI let this go to the extent that it just completely moves into sort of a much sharper decline from these sort of levels. But again, they may be waiting, and again, we're speculating here, but they may be waiting for rupee to find sort of a clearing level. There's every chance you could see exporters coming as well, given these sort of better levels from their perspective. And, I think obviously, as I said, some of this demand has been pent up given what we've seen in recent weeks. So perhaps once you let the air out of this move, we could see a bit more stability.
Is this, Mitul, if we don't know what happens tonight, right? I mean, US, the markets look a little wobbly. If there is a risk of NASDAQ is already down 7% from the highs, it could extend. And that may mean people moving into a safe haven like the dollar. You think that there is that anxiety as well, maybe, at the margin?
Yeah, look, absolutely. I think that is afflicting across Asian markets at the moment and global risk assets. In reality, as you said, we've had AI nervousness, and that has exhibited itself in weaker tech stocks, and certainly some of the key AI stocks have been under pressure. And if that continues, it could lead to some more safe haven demand, and that would probably drive the dollar higher. And we're seeing that again on many currencies. And look, I think there's also a sense that we're going to be moving towards the end of the year. Markets are starting to already looking a little bit illiquid. That's not helping as well. So I think there's a number of factors at play here.
We heard yesterday that there is a large amount of traders and treasuries who are betting short on the dollar rupee, on the expectation that all the bad news is priced in and there is a good chance of the deal getting announced, of a US-India trade deal getting announced sometime soon. Is that true, that people have moved short on dollar rupee? And in that case, that's the stop loss that's gotten triggered?
I think that's fair. Investors had been sort of positioning at least for some sort of a rally in the rupee on the back of any potential trade deal announcement with the US. And I think that the general consensus is that would at least see some appreciation of the rupee, albeit in our view, it could have been more of a knee-jerk move. But I think investors have been positioned that way. Hence, the sell-off is probably a little bit more extreme because some of these positions are probably being stopped out as we speak, given that positioning that was going into this. And look, you still can't rule out a trade deal announcement coming through in the days ahead. The fact that we haven't seen a trade deal yet is also something that could be playing negatively on sentiment.
Absolutely. So actually, that's my question, Mithul. I mean, whether you will see today's high drama on the currency purely a technical issue, the technical factors that we've been discussing, positions being closed out and, the dollar shots having to adjust their positions. Is it purely technical, or would you read more into it and then say maybe this is a hint of whatever is happening between Washington and New Delhi? That's my first question. Then I want to come to levels, because the RBI, as early as yesterday, the RBI governor made it very clear, reiterated that the RBI is not here to defend any particular level. So, I mean, looking at what's happened today, what would the range be? So, two-part question. Is it technical, or is it more than that? And then your range.
Look, I think it is largely technical. Fundamentally, the rupee is arguably already very cheap. Right, and we've written a lot about this. The fact that on a near and a rear basis, it's now cheap across the board and against peers. And there's no value in having much weaker rupee from here, especially given that it could also result in increased capital outflows. And this is something that's obviously weighed on the rupee as well, the portfolio flow aspect on especially equity outflows. But so I would argue that this is technical rather than fundamental. But at the same time, again, giving levels is very difficult here. We had been assuming that we'd see this cap below 89 hold. It's hard to now sort of pinpoint where we see a stop here. We'd actually expected at least some retracement in the rupee as we went into year-end, i.e. firmer rupee. Will still happen if we see a trade deal. But I think for now, it's very hard to see any reversal at the moment until this sort of demand, the stop-loss positioning starts to clear out, when we could see a bit more stability.
All right. Mithul, thanks very much. Good speaking with you, and good to get a quick take on what's happening here. By the way, some wire agencies, etc., are reporting that, and this is, of course, their feedback from traders, that the RBI is likely supplied dollars at near 89.50. And that's what's coming through from Reuters. There you go. That's at the bottom of the screen. What we'll do is we'll take a quick commercial break. Markets, by the way, we've been focused on the rupee, but just look at the Nifty as well. I mean, that's gone south, right? We started with a 40-point cut at 230, and it's essentially just seen almost coinciding with what we've seen on the rupee, on the currency, a sharp slide, and we're down 125 points. Take a break. We're back. We'll get a quick chatter segment going with Nimesh as well, with what he's picking up and some trading ideas after that. Stay tuned.
Welcome back. Markets are down 120 points. The big action has been in the rupee market. For the time being, I think it's at least stabilized at around that 89.45 odd mark, 89.45 to 89.5. That's the level right now. So hopefully it doesn't slip a little bit more from here. But let's hop across to Nimish, who's here to tell us about D-Street chatter. Nimish, what are you picking up with regard to the market? Anything on the rupee, if you picked up something?
Not really, Nigel. That's not my domain.
Okay, we'll wait for Lata to come back. Tell us about the markets.
Okay. From a market perspective, while the Nifty is down, but in the global context, I believe it's relatively outperforming today. But that's not the case. The bigger point seems to be the broader market underperformance. Even in today's market, the mid-cap index is down 1%. And as I've been saying for a while, right, when the Nifty has been outperforming, the broader market seems to be under pressure. And that's where the big pain seems to be. Every investor or trader seems to be sulking to the fact that while Nifty is heading towards an all-time high, their portfolios have not done well. Flows, again, a mixed of trade. You've seen a bit of trend in the last few days of FI buying, and that might continue in today's market as well. But interestingly, Monday we are going to see the big inflow because of the MSCI changes. So that's something to account for in Monday's trading. As a sector, auto stands out today. Some bit of buying as well, but that's one space which has relatively outperformed. I want to discuss a bit on the broader market underperformance. I gave this insight yesterday as well. There are at least 38 to 40 mid-cap names which are under pressure for the last few days. And the reason is there is one big FII which is getting merged into another large entity. And because of that merger process, there are some 38 stocks which they own, whether they're looking to sell it out in the open market or through blocks. So good large liquid names are part of that portfolio. And maybe that's the reason why some of those mid-cap names have been under pressure for the last few days. And that's the trend today as well.
Got it. All right. Good explanation. I recall you saying that, Nimesh. What about individual stocks, though? What are you picking up?
So the first stock on my list is Anupam Rasayan. Again, in a weakish broader market, this stock is relatively outperformed. This week, the stock is up 16%. This year, the stock is up nearly 80%, and big outperformance is there. Of course, Q2 was strong, but I understand one reason could be that maybe the company is very close to an overseas acquisition. So that's the buzz as far as Anupam is concerned. The second name is GMR Airports. Big buying in the last few days in GMR Airports. Again, today, there is very strong delivery-based buying. And I understand one leading long-only fund is an active buyer in GMR Airports in the last few days. The third stock is Indus Tower. Specifically for today, there's going to be in the last 30 minutes, MOC sell flow in Indus Tower at a leading FID. So maybe you'll see some pressure there. And the last name is Gujarat Pipavav. Again, in a weak market, that for the last few days, it's relatively outperformed. And that's largely because for second day running, I understand there are very strong delivery-based buying at a leading FI desk.
Okay, all right. Nimesh, thanks very much for that. The big story, of course, is the AI story, right? This is NVIDIA CEO Jensen Huang essentially rejecting talks of a bubble in AI. This is, of course, the earnings call. Listen in.
There's been a lot of talk about an AI bubble. From our vantage point, we see something very different. As a reminder, NVIDIA is unlike any other accelerator. We excel at every phase of AI, from pre-training and post-training to inference.
Okay, that's the top boss at the company, which is the poster child for everything AI. NVIDIA at the center of a lot of things. And of course, a humongous market capitalization in that sense. 120 points lower on the Nifty, 26,074. Nigel.
Okay, all right. Well, let's go back to our market expert. Then we have Sudeep Bandyopadhyay who joins in. Hi, Sudeep. Good afternoon. We were, at the start of the show, we talked about how the markets have outperformed, which is the case. The problem is, the broader markets have taken a bigger leg down now, just in the last 60 minutes or so. And the Indian rupee has suddenly slipped. You want the currency to be stable. That's something that will hurt you otherwise. What are you looking at? Do you think that this is a buying opportunity? Vast has underperformed. Do you believe there are plenty of opportunities out there? And if yes, name a couple of stocks.
Well, of course. I mean, if you are looking at the Indian markets from a long-term perspective, of course, there are opportunities. And some of these corrections, which do happen from time to time, gives you opportunity of buying stocks. One stock which I've been positive, which is the recent listing, is Groww. And I think we are just seeing the trailer as far as its performance is concerned. They are getting into newer segments, which will be significantly revenue accretive, whether it's margin funding, whether it's distribution of financial products, whether it's wealth management. I think they have the customers, they have the broking business, which is performing very well. and the quarterly performance also was very impressive. But going forward, I think they have a significant opportunity to scale up business and reward the shareholders even more. So this is one stock which I think is definitely worth buying from a long-term perspective. As far as other spaces are concerned, IndusInd Bank is one bank which, again, I would say, somebody has a 1 year kind of time horizon, is definitely worth buying. It's quoting about one-time book. They are getting the pieces right. A lot of cleaning up has happened. There's a strong management team led by Rajiv Anand, which has come in. And, the promoter is committed to infuse capital. There are rumors of fresh fundraise. The board has already approved a significant fundraise. So I think all the ingredients are falling in place. It will take probably a couple of quarters. But, these corrections is an opportunity of buying it at the right valuation. The third stock, again, I would mention is, probably some of these engineering names, capital goods engineering names. And Larsen has been my favorite for a long time. Again, every opportunity one should buy Larsen from a long-term perspective.
Got it. Let's welcome in Sudeep. Hi, afternoon. Venkatesh Balasubramaniam is also with us, MD and co-head of research of JM Financial Institutional Securities from the sidelines of their conference. And I think we had a bad line. So, Venki, good to have you with us. I hope you can't see me, but I hope you can hear me. Your thoughts, Venki, what the conference, of course, I think coming to a close now. So maybe give us a quick wrap out of what you learned. Top 3 things you learned at the conference. What kind of questions, what kind of answers, and what's the mood been like?
Yeah, thank you for having me on your show. We've just almost wrapping up the third day of our conference. We've had almost 200 corporates participating, almost 750 clients who have attended our conference. We've had a wonderful set of speaker series over the last 2.5 days. Significant amount of interest in areas like data centers, renewables, newer technology companies. For example, we had the Eternal CFO talking in our conference. We also had Toyota talking about the auto sector outlook over the next decade or 15 years. Lots of bullishness about the future, despite the fact that shorter term might be a little bit of a concern, but longer term structural story seems very much intact. We also had people from NXP Semiconductors and Bhagwati Electronics talking about the future on the electronics value chain. So that was super interesting. A lot of investor meetings and speaker series. We actually had to bring in extra chairs because it was so crowded. So a lot of both domestic investors and for FII investors have come in. They are meeting companies. They know markets are expensive, but they are evaluating ideas just in case there is a correction. Maybe they are identifying the ideas to buy if there is a correction.
So, as someone, there was a sell-side note which described the market as one where there is a low ceiling and a high floor. So you're kind of in that in that range, right? Would you agree with that kind of an assessment? And what are your own thoughts and convictions now for markets? And long term, of course, is the opportunity is there, but we're talking about, say, the next couple of quarters.
Yeah. So let me put it very simply. Market at 23 times FY26 on the expensive side. Now, clearly, I could justify this market if we were growing at 15% plus on a consistent basis. In 25, Nifty has grown EPS at maybe 3.4%. In the current year, currently our numbers are at around 8 or 9% kind of growth. So a little hard to justify. That is why you have not seen any returns on the index level for the last 12 to 15 months. I don't see that changing at least for the next 6 months. So we are going to see a flattish kind of a market. There is a tussle between the FII investors who are selling. Interestingly, in the current year, I think in the secondary markets, FIIs have already sold $24 billion of Indian stock on a net selling basis, but they have bought roughly around $8 billion of stock in the primary side, the IPO market. On the flip side, you have seen continuous selling, continuous buying from domestic mutual funds. So they have been supporting the market. So in a way, what is playing out is a time correction. I don't see the time correction going away, at least for the next 6 months. As we end the year, next year outlook looks far better. You genuinely have a case for 15% kind of EPS growth. Why? One, because last 1.5 to 2 years, bank stocks haven't been giving you too much of earnings growth. That is going to change around next year. We believe most of the private sector banks can give you double-digit to 15% kind of EPS growth. The GST and income tax cut, which has been done over the last, let's say, 7 to 9 months, will start showing up in your consumption numbers, whether it be auto, whether it be FMCG, and you will start seeing EPS upgrades happening on the consumption side, at least over the next 6 to 9 months. That sets us up very well for the next year. If you do get 15% kind of EPS growth, then you can definitely justify these market valuations. But currently,
6 months kind of flattish, similar kind of markets, right? Basically, is what you are referring to, with, of course, a fair bit of dispersion here and there in some of the sectors you mentioned. Venki, we're short on time, had more questions, but we're also running into close. Thank you very much for joining us, and I hope you come back for a more detailed discussion. Thank you. We take a break. We are back. Sudeep, of course, with us. There's also the market close in about, 7 minutes from now.
Welcome back. Just 3 minutes to go. And as we're closing out, by the way, a lot of the metal stocks have taken it on the chin. They are the worst performers as we're getting ready to close out the day and the week. Look at JSW Steel, Hindalco, Tata Steel, all of them down and down quite a bit. Some of this weakness happening after the rupee tumble started. So that's something to remember as well. Before we let Sudeep go, Sudeep, your thoughts on the metal space overall and also Hindalco. I mean, Hindalco anyway had negative news with Novelis suffering yet another fire. Now, would you buy into any of this weakness? And if yes, would it be ferrous or the non-ferrous side?
Well, I think Hindalco is definitely unfortunate. The second incidence of fire, and definitely, though probably it counts to about 10% of this facility, 10% of their Novelis production, but still, I think definitely this is a setback. And we were expecting things to come back to normal by end December. So this is definitely a setback. So I don't think I will, get into Hindalco. Overall, we have been positive on Vedanta for quite some time. And if I have to look at aluminium, considering the prices at which aluminium is hovering around in the LME, I think Vedanta will be my pick. We have been favoring Vedanta for multiple other reasons, including the demerger exercise which they have undertaken. There has been legal challenges and a lot of negative news flow around it. But we believe that strong value unlocking possibility definitely does exist as and when the demerger actually happens. But there can be multiple views, but the fact is demerger is going to happen. And I think things are moving in that direction. So if you are a bit of an aggressive investor, I think it's definitely worth looking at Vedanta, even at current levels.
Okay. All right. We will, let you go on that note to enjoy your weekend. Sudeep, thank you so much for joining in and giving us all the market perspective. What an interesting week for the market, because despite all the topsy-turvy situation, debate around the AI bubble and whatnot, the Nifty is down for today, but still managing about a 0.5%, uplift for the week overall. Anyway, let's look at today's tally then, 127. But defending 26,000, that's the story. Metals, of course, what we were just discussing, definitely a weak spot. Beyond that, some of the financials have been fairly weak as well. And the Bank Nifty has actually led the slide from the front because it was the outperformer index as well. So look at this. ICICI Bank, SBI, HDFC Bank, Axis Bank, cuts between 0.5% to 1.5% on all of these names. And even beyond banks, so overall financials also seeing plenty of profit taking. Case in point would be Bajaj Finance, which has lost about 2.5%. There's Jio Finance, which is down about 1.5% as well. So financials overall weak. We've also seen some declines on a couple of IT names like Wipro, which is down about 0.7%. Reliance, slightly lower, 5 rupees lower on Reliance, L&T, some of these big boys also coming in for some profit taking. However, on the upside, auto is really revved up. I mean, look at the moves. Maruti, 1.5%. M&M, definitely capturing the street's imagination with all that they have said at their investor day, 1% higher. And even Eicher Motors continued its good form. It's up about 0.25% as well. Overall, by the way, TCS is ending